Okay, looks like we got a pretty stable list of attendees already. So why don't we get started? I'd like to thank everyone for joining us on this. As Riz was kind enough to let me know, beautiful day in Toronto right now. I happen to be in Baden-Baden, Germany, visiting my in-laws and my wife's parents and friends and family here in Germany for their summer vacation. The first time we've been able to travel in the last 2 years, at least meaningfully. So I'd like to welcome you all. This is an information session for the Masters of Financial Innovation and Technology. And I am, Kara, if you can, there you go, that's me. So I'm Ryan Reardon. I'm a professor at the Smith School of Business. I'm director of the Masters of Financial Innovation and Technology program. And also on the side, I'm the director of research for the Institute of Sustainable Finance. But enough about me. We're really here to hear from our expert on all things market structure. With us today for the next 25 or so minutes, we have Rizwan Awan, who is the president of equity trading and the head of TMX markets, products, and services. So you lead the trading business, or Riz leads the trading business at Canada's premier equity exchange. They run the Toronto Stock Exchange, the TSX Venture Exchange, and the TSX Alpha Exchange. You oversee products and services across TMX markets. You're involved a lot, and one of the reasons why we have you here, but just in general, a knowledgeable guy. But for innovating, designing, and building market solutions across asset classes, and really sort of blazing the trail for Canadian markets. Before your role, you spent 2 decades. Riz, you must have started when you were 12 or 10 to be 2 decades into this, but in client-facing capital market roles. And this is where I met you actually prior to TMX, when you were working as the managing director of quantitative execution services, BMO Capital Markets. I don't know if you remember, but I came and visited you on the BMO trading floor. It must have been 2017 or 2018, around that time, when I had just joined Queens and sort of trying to develop our network. So I remember sort of nestling into the sort of the buzz of the trading room again. So I was really appreciative back then of you sort of taking me in and showing me around and having a conversation with me. We do now still spend time on the OSC Market Structure Advisory Committee. You worked on the IROX Market Rules Advisory Committee as well. The former chair of the Canadian Securities Traders Association, the Board of Governors of the U.S. Securities Traders Association. You hold a BMath degree in computer science in the University of Waterloo, and you're CFA charter holder, and you're here with us today. And I'm absolutely thrilled to have you here with us. And let's start the conversation. So thanks for coming, Riz. I really appreciate it.
It's my pleasure. Thanks for having me.
Yeah, no problem. So let's start with the easy question first, the softball. Where do you see the TMX and just equity trading in general 5 years from now?
Oh, definitely a lot higher, a lot more volumes, a lot more trading going on. I mean, of course, you know, I wish I had a crystal ball for anything in the markets, right? As we say, we're all just pundits. No, you know, if anybody's telling you for certainty that this is what the market's doing, this is where things are heading, then, you know, turn around and just walk away. That's not what the business is about. The business is about managing risk. It's about understanding, you know, calculated risks that we take, but nobody can predict where things are going to be. But we can all play a part in building that future, and at least what we would like to see, right?
Yeah. So what do you think are so we've in the past, we've talked about Robinhood, zero commission trading, sort of large retail volumes. What do you see as the biggest issue right now for equity markets or equity markets platforms? You can, you know, sort of pick the question that you want right now. Is it too much retail? Is it not enough retail? Is it a technology issue? Is it not enough or too much technology? What are sort of the sticking points or the sore points from your perspective? And it could be a TMX perspective or just a global perspective.
Yeah, just so as I think about the equity markets or equities as an asset class, it's probably the most efficient asset class on the planet in terms of transactions, right? There's so much more opportunity in other asset classes to improve and innovate, But equity seems to be the focus because, one, it's sexy, like it gets talked about, everybody talks about the stock market. Two, it's heavily regulated. That's the other thing that is very, very important in all this. And as a result, the innovation around it and making it efficient comes partly from that regulation. So as a result, when I look at the equity markets right now, they're in a very, very good state. That said, of course, things can be better, right? There's innovation that takes us in different dimensions. As I look at the U.S. markets versus the Canadian markets and kind of contrast the two, U.S. is the largest market, bar none, of course, by magnitudes globally. So as a result, they can get away with certain things in their market structure that a smaller market like Canada can't. So for us, it's always a battle of trying to understand, well, what works, what doesn't work, and think of problems and market structure problems from a first principles basis. So I'll give you an example of what I mean by that. Payment for order flow, right? This is something that as a practice has been discussed on the back of what has happened on Robinhood. If you look at in the US, retail trading is essentially siphoned off from the rest of the market. The way it works is that market makers or wholesalers, essentially, they have a first look on pretty much all of retail, and they pick and choose or cherry pick essentially which orders they want to internalize and take on for themselves, and then let the exhaust go out to the marketplace. Now, if you think about it, the consequences of that and what that means if it plays out to an extreme, in a small marketplace like Canada, if you were to allow that to happen, then all of a sudden the retail market disappears. And as a result, we're left with essentially either liquidity providers or market makers or institutional clients. And that does not make for a very balanced marketplace. And we're not big enough to have that entire segment of retail being siphoned off. It works in the US markets. It's being questioned there by the SEC regulators right now, but it will certainly not work in Canada. And that's why, looking at the differences between the two markets, there is a difference in market structure and just something that we have to be cognizant of.
And to be clear, internalization, the way it happens in the United States, doesn't happen in Canada. There is some, one would argue, a bit of preferencing that can happen with some of the order types, but in general, sort of this wholesale siphoning off of the retail. I don't want to use the term cream skimming, but that's in a positive sense. It really is sort of a segmentation of right. It doesn't really happen in Canadian markets, at least certainly not at that scale, and not on a wholesale basis.
Yeah. I wanted to go right on that. It's just the regulation itself is different between the two countries.
Yeah. I just wanted to be clear for people that are listening that we're not saying that that's what's happening in Canada. I wanted to actually roll back a point that you said actually at the very start, sort of almost haphazardly. You said actually not Canadian, just in general equity markets, but also Canadian equity markets are extremely efficient. I think they're really well regulated. I think they're a really well-oiled machine. The costs to demand liquidity and even just your ability to supply liquidity is almost frictionless. Yet we often hear, or you also, if you're observing, you get this narrative that something's wrong or something's foul in equity markets, when really, through almost, this crisis, the lockdown, sort of I don't want to say everything, but over the last 15 or 20 years, equity markets have worked astonishingly well and are really low cost. And almost all of the evidence points to them being really efficient and well regulated. Why do you think they get sort of it's not that they get a bad rap, but why do they garner the attention, and why do people sort of generally think that the negative things that they do happen to think about a market that really, from a neutral academic perspective, are really well run? Why do you think that is?
Yeah, like with anything that's under scrutiny or anything that garners a lot of attention, you're going to get those kinds of articles, right? Like the equity market is basically the heart and soul of American capitalism. It is something that gets talked about in the press. It gets talked about in all kinds of circles. You go to a dinner party, people will ask you for stock tips, and I tell them, hey, look, I've got nothing to do with picking a stock. That's not my role. But it's a very common question. Nobody asks me, hey, can you give me a hot bond tip? Like, what bond are you trading these days? It's just not a sexy market. So as a result, there's a lot of focus on it and people's eyes are on it. and that's why it gets talked about. But if I was to look at it from efficiency standpoint, you look at the spreads that take place on some of the other asset classes, the bonds, for example, when you transact it. For that matter, when our Canadian retail goes and transacts in the other market and wants to convert currency, the average retail currency conversion rate, if you were ever to have converted it at a bank, it's measured in like multiple basis points, sometimes percentages.
Yeah.
Whereas if you translate that in the equity world, there's no fee out there that I can think of that would be measured anywhere close to that magnitude. So it is very, very efficient when it comes to the actual transaction. The negative aspect of it is, I think, has gotten carried away with this whole notion of what has happened, this arms race on high frequency trading. As a result, and what's precisely made it more attractive or more efficient is also comes with like a double-edged sword type of scenario where the high frequency arms race has made it so that it becomes, without having the proper technology in place, becomes increasingly more complex to access the equity market.
Yeah, in particular, I think it's harder to supply liquidity in equity markets because it's hard if you don't have the technology to have your order in first, right? It gets down to the arms race, so this, I want to be first and you want to be firster, which of course isn't a word, but we're all rushing just to be first, and doesn't matter if it's a millisecond, a microsecond, or a picosecond. We just sort of put more technology to get there.
Yeah, and then speaking of technology, I mean, the one thing I would say, and this is where I have to be thankful for the sorts of programs that I've seen academics start to more cater towards. When I started my career and looked at the availability of courses and things that we had back then in terms of prepping us for the marketplaces, there wasn't a whole lot available. For that matter, the markets weren't all that electronic. They were just in their infancy. It was early days. If you had to build something or program something, you kind of had to build the infrastructure and learn stuff from scratch. Now, and it was, by the way, it was really hard to find talent. It was really hard to find the right kind of talent for what is required. Fast forward 15, 20 years, now we were in a world where technology hasn't gone away. Technology, if anything, has become even more important. And as a result, we're happy to see that there's more talent coming through the pipeline now than there was in the past.
Just like the MFIT program. No, I'm just kidding. I'll do the plug. So let's talk a little bit about two other markets that you talked about, and let's talk perhaps first about options markets. Now, I happen to be writing actually the paper I was presenting yesterday is on options market structure, particularly in the United States. But TMX does operate one of the platforms in the US. And so there I was shocked at when we talk about liquidity being relatively inexpensive in equity markets, and we're talking like between 5 and 10 basis points sometimes for our most liquid stocks. There we're talking between 5 and 10% for options. What is it about options markets that just makes them, let's just say, less efficient, and whether that means that less liquid or traded less often? What is it about options markets, and if there's some similarities to bond markets that just make them inherently less liquid?
Yeah, well, I mean, for starters, it's there's the pool of investors that are looking at the options market shrinks quite drastically, right? Like you don't have the same number of eyeballs on options. As with a lot of markets, the lifeblood of any marketplace, as I've said before, is typically retail. So if options, because of their complications and the way they transact, not everybody's comfortable trading options. And as a result, your natural pool of retail participants shrinks down quite drastically compared to equities. That has follow-on effects, right? It kind of comes back to the point that I was making earlier. If you start reducing this segment, this very important segment of the marketplace from the ecosystem, then you start running into marketplaces that are not efficient and and you have issues trying to kickstart a marketplace. So that's number one. It's because of the complicated nature of options, your participant levels are lower. And two, you look at in options, the market making community, their obligations and what they have to do. In the equity world, it's a fairly straightforward linear relationship on what you're market making for the most part. There's some nuances, but for the most part, equity market making is a linear relationship. options, you start to get into, they call the Greeks, and essentially you're looking at nonlinear relationships between all the various Greeks around it, like the time value, the volatility aspect, the gamma of the stock. So those things play a part, and they're not as readily or as easy to understand. So it naturally makes it harder for market makers to be in that space. There's limited number of participants in the option space, whereas there are a dime a dozen in the equities. So things like that make it a little bit more difficult to be liquid in the more options market.
Yeah, I mean, I remember back to my options market making days. We had our delta, our gamma, and then our vega, and our vana, and then our rho, and then I can't even remember what the second derivative of rho was, and the time value, and sort of it was much more complicated than managing in equity markets. What do you think about the inherent difficulty in equity markets, right? I trade Apple or I trade Royal Bank. But if I want to do the same thing in options markets, I don't just have one individual security that I have to monitor. I have, sometimes 500 or 600 individual options on one single underlying. Is that a problem technology-wise, or is that a problem? So is that a technology problem that we just have so many issues that we can trade, or is that more of an economic problem? And I mean, I might be catching you flat-footed. I'm just wondering.
Yeah, so we actually do think about this. So as I look at my role and contrasting between equities and derivatives, someone who's had an equity background coming in and looking at the derivative side, a lot of it was an eye-opening experience just to kind of see the dynamics between the differences between the two marketplaces. So I think it's more of a risk problem than it is a technology problem. But technology scales, right? Like whether you're quoting on 5,000 securities or 50,000 securities, technology should scale. That's the beauty of technology. Where it becomes an issue is if a market maker is making markets on equities. In Canada, you've got 3,000 odd securities, of which maybe a handful are liquid. 300-400 that would be considered super liquid. So that's the scale that an equity market maker is operating in. You go over into the derivatives world on options, to your point, each one of those lines will have multiple options listed on them. That can quickly balloon up into tens of thousands. So to give you an idea, on the Montreal Exchange alone, we've got 75,000 plus option strikes, and each one of them has to be managed, and the risk has to be calculated for the market maker, because if they're making markets properly and they're out in the marketplace, they're at risk, right? In theory, they could get hit on every single one of those lines, and all of a sudden you're either long or short 75,000 contracts, and each one of them has a risk associated. So how do you scale that? How do you scale risk?
Yeah, I mean, and the other issue is, you can get hit on every one of those 75,000 options. You can also get hit in a lot of out of the money options that only trade once or twice in the lifetime, right? And so if you're in equity options, you get into Apple or Royal Bank or even something way down in the Russell 3000, that's going to trade 5 or 6 times a day, or even 10 or 20 times a day. So as a market maker, you've got an out before the end of the day. But some of these particularly the out of the money options, the highly levered ones, they might only trade once or twice in their lifetime, and you might be stuck with that on your in inventory for a much longer period of time than in equity markets.
Yeah, there's also asymmetric risk as well, more so in the options than there is in equities. In the option space, they're usually more sophisticated participants. And as a result, like if you're pricing just something just based off of a model, well, you might price a risk here, but in reality, someone that's coming in to buy or sell an option might know something that's way out of the money right now might be their lottery ticket, that they know something is about to happen, and they can take you for a ride there too. So that's another reason why market makers are a little bit hesitant on providing tight quotes and options.
Mm-hmm. Yeah. Well, let's take the same discussion to bond markets, right? Bond markets, I couldn't tell you what the average quoted spread in the bond market is. It's just much more difficult to get the information for a broad cross section of bond, but it's also much less liquid than equity markets. Are the problems similar to options markets relative to equity markets, or they're just sort of different? I mean, the first thing I think of is, the size of an option trade relative to the size of a bond trade is, in some cases, an order of magnitude. I think that affects liquidity supply in those markets.
There's that, but I think bond markets in general inherently have a very different nature from options and equities. I would almost say that equities and options far closer than the bond markets. Bond markets is a completely different universe, and there's a few reasons for that. Well, one, bond markets, because of their bespoke nature and how every single bond trades, it's more of a dealer play. So you're never really buying or selling the same bond. What you're really doing is managing a collection of bonds to get a certain outcome or certain risk characteristic. And because each bond is somewhat bespoke, you have to go find inventory, and that's where the dealers, the large dealers, especially in Canada, hold all the inventory. And as a result, like, they're the ones that can kind of give you substitutes for what you're looking for. So it's not an easy one-for-one fungible bond play. Where it sort of starts to tie in or become a little bit closer to the equity markets is something like the interest rate futures that we have. So that's somewhat of a middle ground where you can buy something that sort of looks like a 5-year bond because it's benchmarked to a Canadian government 5-year bond. We have a 10-year future, a 5-year, a 2-year, and soon a 30-year. That can be your proxy for a bond without having to buy a bond. But that's about as close as it gets right now. That market still is ripe for disruption, but there are challenges because of the nature of the inherent underlying.
So what I agree 100% that the market is ripe for disruption. What's the disruption that's going to drive bond trading to centralized exchanges? You sort of already mentioned it's bespoke. You go through dealers hold inventory. They're not quoting this inventory actively on centralized limit order books. But you could imagine a world in which some sort of centralized mechanism would work and we'd be more efficient than the current structure. What is it that's holding? Or why aren't we moving there? Because I would argue the last 5 years you haven't seen much movement towards any kind of centralized mechanism to trade.
There's vested economics, as you can imagine. When their spreads are wide, there's a reason. Somebody's making.
Someone's earning that spread.
There is that component of it, and that's not to say that it's not warranted at times, because they are warehousing risk as well. They are warehousing bonds, so there is balance sheet usage. So things like that do play a part. Where I see the bond market sort of iterating and going to its next level wouldn't actually necessarily come from the bond markets or the bond trading desks themselves. It would probably come from a different disruptor, such as, if I was to pick one champion for it, would be the ETF desk, for example. You now have these exchange traded funds that essentially track bond indices. So this is where the two worlds are sort of colliding, where something that trades like an equity has its risk and underlying completely rooted in bonds. And for them, and an ETF desk, because they're not really part of the bond desk, they go to wherever they can find the most liquid way to hedge their risk. So they will absolutely go to the bond desk and find the right bonds to hedge their risk. They will also go to the futures market to find their futures that can hedge their risk, or find proxies in between, right? So that's an area where I think we will probably see some disruption, because if we could electronify the bond market and build out an easy mechanism to trade, they will be your biggest clients, or they will be the natural sort of champions of that marketplace.
Yeah, I agree. I mean, either they'll push the mechanisms underneath to be more centralized, or they'll just be a centralizing force themselves, that we just end up going to ETFs rather than the underlying bond markets, which will then, of course, drive the mechanism underneath to be more centralized if people are focused on those things. We've got 3 minutes left, Riz. I know the time's been flying. What's something really cool that the TMX is working on that would surprise sort of most people that's coming? It could be in the next year or the next 5 years, or what's something that someone like me, a market structure geek, would find super exciting?
That's a really interesting question. Obviously, there's a lot of stuff that I can't talk about, but I guess
right.
if you have to read the tea leaves, like think beyond just traditional asset classes. And I don't mean like crypto and all that. Like, I mean, obviously, everybody under the sun is looking at crypto, but even more so, like anything where you can find a buyer and a seller, and anything that there's essentially a market. Well, guess what? We're in the business of markets, so we're looking at it.
That's cool. So So I think I have some ideas what you mean there, but maybe I don't. I don't know. What do you see? Do you see? And this will be the last question. Do you see Coinbase or CoinSquare or these cryptocurrency exchanges as a competitor, as a partner, as a merger candidate? You know, how do you see them? They do offer a lot of the same or similar, I'll say, types of services, just on a different asset class. So as a neutral academic, I would say this looks like something that's ripe for consolidation. Do you see it that way? Have you thought of it? What are your thoughts on that?
Yeah, I think we're still in the early phases of that game right now. I mean, obviously, if you look at the Coinbase valuation, they can easily buy 5 TMXs and still have money left over to have another marketplace, right?
Yeah.
It's just that space itself has taken off. The jury's still out in terms of like how sustainable it is long term. But as I look at them, look, as alluded to, like there's marketplaces that we can look at and functions that are similar. I don't necessarily view them as competition per se, but at some point it's going to start melding together. At some point, if we're in the business of marketplaces, we have to look at crypto. And similarly, the inverse would be true as well. I would fully expect Coinbase, if they're in the business of markets and not specifically crypto, just business of markets, they will be looking to other asset classes. There's already a number of wonderful like startups that are looking at this space where they're trying to bring tokenization and equity trading together. So that would be kind of the natural in at some point.
Yeah, that would be the natural bridge, right? Tokenized equities that can trade. But that might be a discussion for another day. I really appreciated having you here, Riz. I mean, we could talk longer, I'm sure. Hope that everyone that was listening enjoyed it, and hope that you guys all listen very attentively to Kara for the next 30 minutes. But thanks, Riz. I look forward to seeing you in person, hopefully sometime soon, either in Toronto, Ottawa, or in Montreal. Thanks for coming.
Likewise, and thanks for having me. Thanks, everyone.
Thank you, Rizwan.
Thanks, Riz.
Thanks,
Bye-bye.
Ryan. Okay.
Thanks, Kara.
Thank you. All right, I'm just going to share my screen here. And okay, here we are. Thanks everyone for joining. Thanks to our special guest Rizwan for joining, Ryan for that amazing discussion. So we spent the first 30 minutes talking about modern trading and markets with Rizwan A1, and now we're going to spend the second 30 minutes for those of you who want to stay on and hear more about the MFIT program. So I'm going to go over all of the program details with you today. And I wanted to first start with sharing that the Smith School of Business is at Queen's University has actually been around for over 100 years, starting the first commerce program in Canada, the first undergraduate business degree. And on the left there is a picture of Goods Hall, which is home to Smith School of Business in Kingston, Ontario, on the Queen's University campus. And on the right-hand side, that's Smith Toronto, and that's situated downtown at Front and Simcoe, so very close to Union Station. And that's where the new MFIT program is located out of and situated in. However, students will have a chance to visit Goods Hall during their time in the program. And just to quickly introduce myself, I'm Kara McCreary. I am the Assistant Director of the Master of Financial Innovation Technology program. So I support Ryan on the admissions process, as well as a main point of contact for the students when you're in the program. And so Ryan and I work very closely together. But I'm also joined by our MFIT application advisor. So for those of you looking to apply to the program, or perhaps you already have, if you already have, you'll be familiar with Jennifer Mayer. And she is joining us as well, and she will go over a few tips and suggestions for the application process, the best way to get in touch with her, and she'll also be around for some questions as well. So hang around for that. And I'll just mention, I'll leave time at the end for questions from everyone as well, from curriculum, anything else you might have. I did see a question in the chat already about the curriculum for Ryan, but I think the slides going forward will cover some of that. And if not, I'll make sure to come back to that question. So the MFIT program, I'm sure many of you have maybe heard of this, or maybe you know, or maybe you don't know, but it's the first of its kind. And so I mentioned earlier, it's a new program. So we launched our inaugural cohort last November. And we are now starting our second cohort this November. The program was really created because it was a response to a gap in the market. And to highlight that gap, I want to just share with you a testimonial from the CEO of McKinsey, as I think this does a really good job of highlighting why the MFIT program was created. And the CEO said, "I have lots of people who speak the language of business, and I have no problem finding software engineers who speak the language of technology, but I can't find translators who speak both languages." So the MFIT program is aimed at solving this consistent refrain from employers for experts with an understanding of the fundamentals of finance, but also the skills that they need in data science and machine learning. And of course, with the rapid advance of fintech, blockchain, automated investing, and digital capital markets, the demand only continues to grow. And so the Smith MFIT program is aimed at solving and filling those skills gaps. To just further corroborate the gap that is in the market and highlight the issue that the MFIT program is aimed at solving, I wanted to also share with you, this is a testimonial from Jennifer Reynolds. She is the president and CEO of Toronto Finance International. She also is one of our 17 advisory board members, and a little bit later I'll share with you all of our advisory board members, but it's on our website. And I think Jennifer does a good job of highlighting the need here. And she says, "The pace of technological change in the financial services industry has never been greater. As a result, the need for talent that can help accelerate innovation is critical to the success of every organization. The Smith MFIT program is designed to build the pipeline of skilled talent to fill these jobs, which will drive the success of the sector and its critical contribution to the Canadian economy." So I think you're definitely starting to see the need and the development of the program. And now I'd love to share with you how the program is built. So how did we build this program that started last November? So the program is built on 3 foundations. Okay, I'll just start with, sorry, the data science component, which is the data science layer is going to teach you in the program how to deal with the data. It's going to teach you how to collect it, process it, analyze it, visualize it, understand it, and present it. The analytics layer is in the middle there, and it's based on machine learning. It will teach you how to take the data and make decisions with it. It will teach you how you can automate a decision-making process, how you can understand which factors or variables are driving decisions and outcomes that we see. And finally, we apply these learnings to financial technology, the third foundation, which encompasses many things, from delivering financial services in a new way to paying for things in a new way, and everything in between that is a financial process, essentially, that we're using technology to solve. Some of the questions you can answer with the data science component will be, where can we invest our money, or how can we lend to someone profitably? The financial analysis component will answer, what were the risks and what were the returns with the investing that we did or the lending that we did? The machine learning component will help us to speed up or automate that process of figuring out where we will invest or where we will lend, help us to understand the risks and returns, and it can also help us to do this better, cheaper, and or faster. And finally, fintech is where we bring all the learnings together with automated and technology-supported decision-making. So as you're certainly starting to see, the program is about technology and finance, not one or the other. And just to touch on a little bit about the curriculum. So you will learn data science and machine learning tools and methodologies and how they work against a myriad of approaches, which will be, it will include loan pricing, derivative trading, hedging and pricing, risk management, asset management, valuation, prediction of macroeconomic trends, and more than that. So I hope that kind of answers that question up at the top about the curriculum. And furthermore, the program will cover both theory, but with a practical application. So you'll learn the fundamental mathematical and statistical theories, of course, and methods, but with a practitioner focus in technology. You'll learn that financial theory and how to apply it to real world decision-making. And you'll also, perhaps most importantly, understand the economic impact of that decision. You'll develop power skills as mentioned here, some of them listed of course, that you would find in a traditional master's program like strategy, innovation, entrepreneurship, as well as entrepreneurship, teamwork through presentations and working on team-based projects, business acumen, analytic capabilities, leadership, and communication skills. Your evaluations in the program will vary by course, but you can expect exams, of course, individual and team-based assignments, presentations, and things like participation as well will be included in some of the courses. So that's really the curriculum structure of how it will be taught to the students. And here's a more granular look at all of the actual courses you'll take in the program. So these courses are listed on the website, but I will just spend a moment just to show you how they're categorized. So on the left, you have your technical courses. And so these are your FinTech courses that you will take with your MFIT peers. And these are brand new courses and curriculum that we've added to help fill that skills gap that we talked about earlier. In the middle are your analytics courses, and these are the analytics and AI courses that we take with our Master of Management Analytics students. And there's 5 courses there listed, and this is where you'll get your data science and machine learning layers. And then the financial courses are the financial fundamentals that you will need to be able to understand how this all comes together. And we take those with our Master of Finance peers and students. So those 4 courses are listed there. And I would be remiss if I didn't mention that the middle courses coming from our MMA program, that the MMA program was awarded the 2020 UPS George D. Smith Prize, which is an award that recognizes excellence in preparing students to become practitioners of operations research and analytics. So we're among great company with our Master of Finance and our Master of Management Analytics programs. And then, of course, we have the layered technical courses into the program. Oh, excuse me. And to quickly touch on the programming languages that you'll learn these in both your technical courses and your analytics and AI courses. These are just some of the languages and programming tools that you will have access to, you will be leveraging and using sometimes for projects and assignments. And coming into the program, you will likely be asked to take a Python and SQL certificate course just to make sure that you're coming in with on even playing field with all the other students coming into the program. So the schedule for the year, or for the 14 months, I should say. So if you're looking to apply or attend this November, the program will run on November 1st, 2021 is when we'll start this year in the fall. And it will run for 14 months, concluding right before the holiday break of next year, December 2022. During that time, during the 14 months, we'll have 2 residential sessions, which is a time where we get together for daytime courses, learning, networking opportunities, and team building activities. I'll touch on that a little bit more on this next slide. And then outside those 2 residential sessions, which are about a week long and require you to take some time off work, the program will run weeknights and weekends throughout from our Smith Toronto location that I mentioned earlier at Front and Simcoe. So this program is designed, as are all of our Smith Toronto programs, for a working professional to take in the evenings and weekends. And excuse me, one update I wanted to share with you that is a new and exciting update, I believe, and I think will be of interest to some of you, is that we are going to allow for this November start for students to opt to take the program remotely. So if perhaps you live outside of the Greater Toronto area, or you're unable to move or relocate, or perhaps, with the pandemic, you might not be comfortable yet coming in person, you would be able to take this program for this coming year remotely. But we are planning and encouraging in person. And so November 1st, we will start an in-person program with our opening session. And then you will have asynchronous classes as well. So there will be times where you will take some of your classes and your curriculum and your content at a self-pace. So you'll take some of that content online on your own time, and instead of having everything taught to you live. And I mentioned I would just go a little bit more into detail about the residential sessions. So the first one's in November, and that will actually be the 21st to the 25th. So it'll be 5 days Like I mentioned, that will be in person with an option to take it remotely. And then in June, we'll get together again for either about 6 or 7 days in mid-June of next year. November's will be in Smith, Toronto, and June's will be in Kingston. And we hope that we will have an absolutely 100% attendance rate for in-person in June, so that everyone can meet each other in person. And that's still a ways out. So I think we're very optimistic that that will be likely. And yeah, these are times where you will take some of your courses, team building activities, networking opportunities, and really it's going to remind you of your undergraduate days where you are in daytime classes, and it's really an exciting week-long event of activities. And there's a beautiful shot of Goods Hall, which we will be in for June. The faculty, I won't spend too much time here. All of our faculty are listed on our website, but just a note that our educators come from technology, finance, analytics, AI, and they are industry specialists and practitioners who teach from real market experience. Our advisory board, I mentioned Jennifer Reynolds earlier today with the testimonial. So there are 17 members. They're split across 2 slides. They're all listed on our website as well. So I will just quickly go to the next slide here for you to take a gander at everyone. Our advisory board is fantastic. They are very supportive of the program, and we have them in 2 subcommittees, one curriculum subcommittee and one student experience. They get involved in many different ways, from mentorship opportunities with our students, pub nights, which we turned virtual for the year, and as well as weighing in on the curriculum and providing projects and data sets and data points, as well as just reviewing our curriculum and making sure that we're staying in tune with what the market requires from the talent graduating from this program. Our career management framework. So this is very exciting. I was just meeting with our Career Advancement Center this morning, planning out for next year. So it's built on 3 different pillars, our career management framework. And the first is Discover. So right off the top, in the very beginning of the program, you'll meet your career coaches. You'll be able to schedule one-on-one career coaching with them. They will help you to set up your resume and how to access the internal job postings that are on a platform called Quest. So you'll be at the very beginning of the program, introduced to that team and set up to leverage them really as much as you'd like. Throughout, they'll help you to build your presence, your brand, help you with interviews, make sure you're prepared for those, many different networking sessions with our corporate partners. And finally, the third structure in the framework is Launch. So they will help you with your job search, with your recruitment, with onboarding of a new job and offer negotiation. They will be with you 6 months following your last class in the program. So if it's something you're more looking to do once you've finished the program, you absolutely have time to tap into those resources following the program. Or some of our students are looking to make transitions during the program. So whatever suits you is more than fine. And you might come in with one idea and see something that sparks your interest partway through. So as you know, we of course leverage courses from our Master of Management Analytics program and our AI program. And so that has made us eligible, and we're very excited to share that we've recently been recognized by the Vector Institute. And the Vector Institute, what that means is that MFIT has been recognized as delivering a curriculum that equips its graduates with the skills and competencies sought by industry as a complementary program in business. So incoming students for actually next fall will be eligible for Vector scholarships in AI. The nomination period is actually in the winter from January to March. So unfortunately, they're not available for this incoming fall year, but there are more perks than just scholarship opportunities that I would like to highlight here. And you can, of course, check out the Vector Institute website. But just to quickly touch on a few of the benefits of being a recognized program by this institute is there are networking opportunities, there are recruitment-focused events. They themselves have some career support activities with technical experts, workshops about building your portfolio. They have an internship program, both for part-time and full-time options, which might be appealing to international students, the part-time one in particular. And they have also a digital talent hub. So they also have somewhere for you to go and see and check up on job postings from internships to full-time, and including restricted postings that are exclusive to the Vector community. And of course, many more opportunities. So I encourage you to check out their website and kind of see what's in store for you as a student in a program that's recognized by them. And this, I think, is a really timely a slide to share with you all, because the Olympics, of course, going on right now. I've been trying to catch a little myself. It's been exciting. But yes, so Smith has been very fortunate to have an exclusive partnership with this Canadian Olympic Committee, the COC, and game plan since 2016, providing scholarships to our Canadian athletes as they transition from sport. At the program level, these athletes have been invaluable contributors to our team-based environment, bringing resiliency, leadership, and a track record of excelling at the highest level. Students from across our graduate programs have commented on the benefits they've experienced, having the chance to work side by side with our Canadian national team members and Olympians, reinforcing Smith's team-based approach to learning and high-performance coaching culture. So I believe we have some Olympians right now that are in some of our programs. There's one in the EMBAA and one in the EMBA program, and many more. So it's a really exciting partnership. And yeah, we'd love to have an Olympian in the MFIT program, but if we don't, perhaps you'll meet one in your MMA classes or MFIN classes. It's a very exciting partnership though. And in lieu of having alumni, because of course our students are still in the program in the inaugural cohort, I wanted to share with you, this is a representation of the alumni from our Smith Toronto program. So all of those programs I mentioned earlier, just to give you an idea of what an alumni looks like coming out of a Smith Toronto program. The average age is 34, the average years of work experience is 6.3, the average years of management experience is 2.5, and 35% of all of those programs have a female representation. In general, the whole Smith alumni, we are greater than 25,000 strong. So it's a huge dynamic network for you to take advantage of. And upon graduation, you are part of that alumni network, and you have access to, the whole alumni network through something called Smith Connect, which you'll learn more about in the program. In lieu of having an alumni slide for our inaugural cohort, what I can share with you is our first year program statistics. So we had 19 students start in our inaugural MFIT class last November. The average age was 33. The average years of work experience was 9. We were about a quarter female. So we are looking to improve that for our next intake. And we had 2 international students, which is quite amazing because of course, our program does run on Eastern Standard Time, even though at this point we have been remote. We have a very diverse group of students, not only when it comes to citizenship, but also industries represented and background and experience. And I will just quickly touch on the fees before I introduce Jennifer, who is our MFIT application advisor. And then I will take a look at some of the questions I can see here that have come in. So the domestic fees for a domestic fee paying student would be 44,440 Canadian dollars. For an international fee paying student, it's 76,705 Canadian dollars. These fees are inclusive of course, tuition, but also books and learning materials, meals and accommodations, accommodations for the second residential session. For the first one will be in Toronto, so accommodation will not be covered for the opening session. And all software licenses. So that's an inclusive fee. The payment structure is a deposit to hold your spot in the program, $2,000, plus then there's a three payment installments over the course of the year to try to make that more digestible and manageable. These fees are on our website as well as the payment structure dates as well. I'd now love to introduce Jennifer Mayer. So as I mentioned, she's our application advisor. And for those of you looking to apply, I encourage you to listen to what she has to say. And if you already have applied, you may already be familiar with Jennifer. So welcome, Jennifer. Thanks for joining.
Hi, Kara. Thank you. So as Kara mentioned, I'm an advisor for the MFIT program. So to get things started, we typically start with what is called a preliminary assessment. So That would mean I would just need to review a recent copy of your resume as well as your unofficial transcript. So just to sort of give me an idea of your profile academically and professionally. At that point too, I'll be providing you with feedback in terms of the strength of your file and eligibility to the program. And then I would guide you through the next steps to complete your application. So essentially my role is to be continuously in touch with you, providing you feedback so that at the end of the day, once your file is complete, we are presenting the strongest case to the admissions committee. So in terms of a complete application, what we are looking for is a cover letter. There's 2 references. So these references are electronic. So we would just require the name and email address of the references. Typically like to see like one from your manager and then one from a colleague to sort of, again, give us like a full around idea of how you work in a team. And to know that you've had the conversation with your employer about the program. So they take about 10 minutes to complete. They're very user friendly. We know and understand that you are asking busy professionals to complete these references. We will then be looking for official transcripts or a WES assessment for those who completed their degree outside of North America. Once everything is in, then you'll have an interview with Kara. Typically the interview is via Zoom. It's about 30 minutes in length. And it's just to get a better sense of sort of your motivation to take the program and ensure that there is a good fit there for what you're looking for and for what the program can provide. So in saying that, I would strongly encourage you, if you are thinking for applying for the program beginning this November, to reach out to me as soon as possible. My email address is there. And if it's whether you have questions or you're looking for just sort of some feedback in terms of where you stand in regards to the program and admission, or you can have a call or a Zoom call, whatever it is that you require, I'm more than happy to do. But again, spots are very limited and it's sad to say, but November is approaching very quickly now. So again, I just want to reiterate to reach out if you are looking for this November. And I look forward to hearing from some of you.
Thanks, Jen. Thank you. Okay, I'm just going to run through some of these questions. Okay, I think I got that one. And okay, so in our chat. So there was a question about programming languages, so SQL and R. Absolutely. So someone mentioned they didn't have experience with that, and absolutely no concerns with that. Many of our students coming in do not. And so what would happen is Jennifer and I would hear from the admissions committee based on a decision for some recommended certifications for you to take. So those would be not too laborious and not too time consuming. So you'd still have time to do those before our November start. And that would help prepare you to be more successful in the program. So ultimately it will help you. So do not worry if you don't have that experience already. A question about the percentage of self-study versus in class. So asynchronous versus synchronous is some of the language we use at Smith. And to answer that question, I would say a majority of it will be synchronous and taught to you live. You might find a slightly higher percentage of asynchronous work if you opt to take the program remotely. So if you're going to be taking the program in person, you can expect a great deal of it, a majority of it, to be taught live. If you decide to take the program remotely, there will be a little bit of a split in some of your analytics courses where, if it's a lecture, it might be pre-recorded and you would watch that, and then you'd get together live for the professor to have a conversation with you or visit your breakout room with your team and discussion like that. So I hope that helps to clarify. Normally I would say, I would just have a direct answer for in-person, but because we have that remote offering, I wanted to just touch on that. So depending on which avenue you're looking for in the program, it might vary a little bit, but still majority would be live. There is a good question about someone living outside of the Greater Toronto area. So absolutely, I think we're very fortunate that for this year, due to the uncertainty of the pandemic, we are going to be able to offer students a chance to take this program without coming into Toronto to take the program. So It is something we are offering this year. So yes, you could take this program fully remotely. The person has asked if they would come to campus if needed. Yes, I would say that the one time that you would need to come to campus would be in June. So June of next year, and that would be in Kingston, Ontario. And that's the idea of that is it's our second residential session, and we really want everyone to be together and meet face to face, hopefully when times are a little bit more safe to do so. And then the other question about curriculum, I hope I touched on that, but Mandeep, if you have any questions about that, send an email to Jennifer and she can forward it to me and I can get you an answer. And if I don't know it, Ryan certainly will. And I think those are all the questions in here. So, let me just check the Q&A. I'm sorry. Is there a recording for the session? Yes, not to worry. All of the attendees, or anyone who registered, I should say, for this webinar will be receiving a link to the recording following. And someone also asked about SQL and R. Yes, no problem at all. Jennifer and I would still encourage you to apply to the program. The admissions committee, upon acceptance, may just recommend to you 2 certificates just to make sure that you have some level of understanding coming into the program, but you still have plenty of time to take the programming. And okay, well, thank you all so much. And yes, we should have a schedule to share on the program shortly. Our incoming students are actually anxious to see that, of course, and we are putting that together, and it should be on the website shortly. But again, it's weeknights and weekends, so manageable with a full-time working professional. Thank you all so much for coming on a summer Thursday, no less. And we'll have another one of these in late August with a new guest speaker. So please come back to the website and join us for our next one. And have a wonderful, wonderful day. Thank you, everyone.